Like our convertible bonds are outperforming Bitcoin right
Right.
now. So why wouldn't you buy something which outperforms Bitcoin, but you have a credit guarantee and you're senior in the capital structure.
Yeah.
So the simple ideas are working, simple compliant ideas. The hyper complicated ideas, they're 100 times as hard, they're 1% as valuable, they're not working. And my advice to anybody is don't try to do those things. Focus on the simple ideas.
Even though investors still rely on gold and oil investment vehicles, Bitcoin is the only commodity that is made to withstand long-term economic changes. Gold, oil, and soybeans are examples of traditional resources that tend to lose value over time because it is easier to increase production when prices are higher. This is due to the fact that higher production results in greater supply, which eventually lowers the value of these resources. For example, high prices for gold often lead to more mining activity, which floods markets and makes prices unstable. Parallel to this, technological developments lower the cost of resource extraction, further diminishing the resource's value. Unlike these other assets, the supply of Bitcoin is fixed by code. No matter how much demand or innovation there is, the amount of Bitcoin that can be produced cannot exceed the predefined limit. Because of this, Bitcoin is naturally resistant to inflation, which makes it incredibly suitable for long-term wealth preservation.
I think all the rehypothecation experiments have all crashed and burned over the last decade. So
Mhm.
I don't think they've got a good track record. I think that all the layer two type applications, they're always very interesting to programmers, but no one's figured out how to scale them without some technical instability. You run into massive amount of technical problems, massive amount of security issues, and then massive amount of regulatory issues to do that. So I think that the best way to generate yield and generate a return is you buy the Bitcoin, you hold the Bitcoin in cold storage, and then you sell equity at a premium. That's the risk. You know, when you're selling equity at 3 times NAV, you're literally selling dollar bills for $3 all day long. You
Yeah.
have a money printer, okay? It's a risk-free money printer. So why would you do anything else if you could literally sell dollar bills for $3 all day long? And so the creation of high volatility, high optionality public equity, and then bonds, convertible bonds, fixed bond, corporate bonds, or preferred stocks. All of those are by far the best, lowest risk way to generate yield off of the underlying Bitcoin. They solve the compliance issues, right? Because you're selling a compliant security on a compliant exchange. So you don't run into this issue where you did something really cool that is illegal in the state of New York, right? Or it's illegal somewhere. So they solve the compliance issues, and then they also solve the scale issues. If you have a good bond, someone will buy. I've had meetings where someone gave me a $500 million order after the meeting.
Yeah.
Like, can you sell $50 million of something in 20 minutes? I've sold $250 million of something in 20 minutes. So if you want to scale the business, if you want it to be compliant, if you want to generate substantial material yields, then I think you want to do it by issuing securities. And of course, there's one ladder of securities in Japan, which are different than securities in America or US, which would be different than Brazil.
Mhm.
It would be different in France, different in the UK, different in Germany, different in Switzerland, right? Different everywhere in the world, in Canada. So basically, securitizing Bitcoin in some kind of wrapper, it could be as simple as, okay, here's an ETF, but it could be here's a 2x ETF. It could be here's a Bitcoin backed bond ETF. It could be here's the bond. It could be something else. It could be here's the option. Those are all the most compelling ways. I think the reason that certain people in the crypto industry don't embrace it is they don't have the technical financial capability to create these
Yeah.
compliant instruments in these markets. So they go for the crypto token approaches or quote unquote crypto native. But the bottom line is the crypto native approaches are only 1% of the opportunity and they're 100 times as hard. And
Mhm.
so the real money here is going to be made by more conventional financial firms that are going to issue $100 billion worth of Bitcoin backed bonds and then a trillion of Bitcoin backed bonds. And then when
Mhm.
people go, oh, well, a trillion, I guess is saturated, then they're going to issue 10 trillion of Bitcoin backed bonds. And people watching are going to complain that it just seems too simple, right? It's like, and what I see a lot, Jeff, in this market is I run into crypto people that have been in the business for a decade and they have very complicated ideas that don't work.
Yes.
And I offer them a simple idea. I'm like, here's an idea. You're a public company, sell your equity, buy the Bitcoin. They're like, no, that'll never work. Okay. Well, I guess it might work. Well, what if the Bitcoin goes down? Well, blah, blah, blah. Okay, I guess it worked. And you know what the latest pushback is, Jeff?
Let's
The
hear it.
latest pushback is, well, it worked for you and it worked so well that you're the winner and there's no room for another company to do it in the market. So we literally went from, I don't think it'll work at all to it might to it did. Oh, it worked too well. That's my excuse for why I'm not going to do it.
Yeah.
And people just come up with these giga brain excuses for why they don't want to do the simplest thing in the world. And the reason it works, by the way, is everybody wants to be able to buy the equity and borrow against the equity from their existing wirehouse. So, like
Mhm.
MSTR, you can borrow against it from a big bank. They want to be able to sell the volatility to generate yield on us. You can do that by selling the covered calls, right? They want to solve the custody issue. I want to call my Merrill Lynch broker and buy $10 million worth of it in like 15 seconds. So
Yep.
if I can, it's convenient,
That makes yeah.
compliant, it's conservative, it's simple, we're just solving these very simple ideas. It's like, well, how about this one? I just like to buy the upside with no downside. Like our convertible bonds are outperforming Bitcoin right
Right.
now. So why wouldn't you buy something which outperforms Bitcoin, but you have a credit guarantee and you're senior in the capital structure.
Yeah.
So the simple ideas are working, simple compliant ideas. The hyper complicated ideas, they're 100 times as hard, they're 1% as valuable, they're not working. And my advice to anybody is don't try to do those things. Focus on the simple ideas.
Unlike traditional assets, Bitcoin was created by a single individual or a pseudonymous creator and has thrived in spite of the lack of backing from corporations or the government. Unlike gold or oil, which are both physical commodities that need time-consuming logistical administration, it can be transferred instantly across borders at the speed of light. Physically composed commodities are susceptible to rust, deterioration, and extraction from the earth. Furthermore, borders and banking systems play a role in the movement and settlement of these goods, which can lead to delays. In contrast, Bitcoin is regarded as a digital currency, which allows it to move freely, settle instantly, and prevent inflation because it lacks any mechanism that would cause it to do so. Bitcoin is similar to digital gold, but it has the potential to be more valuable than gold due to its digital property. This is due to the fact that digital assets usually perform noticeably better than physical assets.
After 10,000 years, people haven't come up with a better material to build a ship with or a building with than steel. It's like there's
Mhm.
a lot of other metals and a lot of other materials and a gazillion million whatever alloys, but it oftentimes happens in nature that there is one best answer, and the best answer is good for 98% of all the applications. And everybody that ever came up with the different, the crystal ship and the diamond ship and the rubber ship and the wooden ship and the aluminum ship and the whatever, and it's just like it was good for a little bit of time, and then it hits a hurricane and it snaps in half, and it sinks and everybody dies. And they're like, well, I got, never done that before, So I caution that degree of innovation, right? Like, you have an answer. God gave you the answer. You can either embrace the answer or you can insist on being different, right? And I would advise that if you want to build a different city, don't innovate in the dimension of steel. Keep the steel, right? Pick a different way to innovate. Maybe make the boulevards wider or something like that, right?
Yep.
So coming back to Bitcoin companies, I think the key with Bitcoin is the protocol itself is stable. Nobody can censor the network. It's distributed enough. No one can censor or corrupt the protocol. No one can control the price. It is sufficiently decentralized and global that no company, no country, no capitalist has enough influence to be able to put it at risk. And it is the one thing that we can all agree on in that regard. So when we go to the question of companies adopting the Bitcoin standard, Jeff, I think the primary guiding principle is you want to do this well. The question is, are you going to adopt Bitcoin as your primary treasury reserve asset? That means like flip 90% of your long-term capital to Bitcoin, right? 5%, 2% doesn't really do the job. You really want the vast majority of your long-term capital. Substantially, you want 100% of long-term capital to be in Bitcoin. And I define that as you've got working capital. If you need $50 million in working capital, then you hold that in the fiat currency of your liabilities. Everything else is long-term capital. You flip that to Bitcoin. And then after that, right, you've got two parts of the business. You've got the operating business, and then you've got the treasury, or you've got the balance sheet part of the business. I don't have any advice to people on the operating part of the business. Every single operating business is different. The only thing you can say is that 0.1% of operating businesses are good, and 99.9% of operating businesses struggle at all times. I mean, that's the big piece of wisdom I have for you. If you feel like your business is under pressure and is difficult and challenging, that makes you one, of the 99.9% that feels the same way. The only people that don't feel that way are the ones that run the monopolies, that are either state-sanctioned monopolies or digital monopolies, and everybody else struggles. And so there's no simple unlock there. I'm going to tell you, get a monopoly from the government of the local country you operate in. That's my suggestion. Or maybe you're lucky enough to be Apple or Google or Microsoft. But if you're not, then the operating business is all about finding a monopoly. And it's not easy to fix that. It's pretty obvious, right? It's quite obvious. It's hard to be better than Amazon or Microsoft or Apple. So the real advice is focus upon the balance sheet, where it is very easy to be better than the US dollar standard or the fiat standard company. So that's the part of your business you can fix. You can fix your balance sheet. And most people don't. Like, most people don't focus on that. They put 98% or 99% of their effort into their P&L. And they're basically pouring 99% of their focus and their energy in a losing cause, and they're not going to win. And they're putting 1% into their balance sheet, where you're 99% likely to succeed on the balance sheet under the Bitcoin standard, and you're 99% likely to fail in the operating business on the fiat standard. But conventional wisdom is to focus on the operation and dismiss the balance sheet. And if you want to escape from that dilemma, you have to invert that, and you have to fixate on the balance sheet, and you ought to play defense with the P&L. You're a dentist. You're going to keep being a dentist. You're not going to grow 25% a year forever. You're not going to crush Apple and Amazon and Google. You're a dentist. Just run a profitable dentist practice. And then take all the money from the profitable dentist practice, and buy Bitcoin with it. And if somebody wants to give you a massive loan against your dental practice, mortgage the dental practice to the hilt, borrow $10 million, buy Bitcoin with it, and you'll wake up and you'll be a billionaire, not because you made $1 billion in dental fees. You'll be a billionaire because you were smart enough to borrow money against the dental practice, buy Bitcoin, and it 10 to 100x from there.
For centuries, gold was used as a store of value, but it was prone to breakdowns and inflation. The idea of perfect money did not exist at this time. Bitcoin was a technological innovation that was not produced by a corporation or government, but rather by cutting-edge technology. It offers a stable and unchangeable form of currency. Because the US government now recognizes Bitcoin as digital gold and views it as a reserve asset, the cryptocurrency has become more stable and reputable. Given this acknowledgement, it is probable that Bitcoin's value will rise further, possibly hitting millions of dollars per coin. This is particularly true if Bitcoin is thought of as a safe haven or a basic store of value. Even though many people still do not understand or own Bitcoin, early adopters see it as more than just a fad. Although it is still in its infancy, Bitcoin is a revolutionary form of money that makes use of the internet's power.